If you're new to the channel, then welcome, and if you're returning to the channel, then welcome back. I just want to say a quick thank you to you for tuning in. So when I was a kid, one of the early benefits I heard about in regards to opening up a bank account, and specifically a savings account, was that by putting my money in there, the banks would actually give me a little bit of interest each year, so that way I could basically be earning some extra money just by saving it. Now, this was the first time I heard of anything that was kind of like a small investment or maybe passive income, and that's what totally introduced the concept to me. And it seemed like a great idea. Now, if you've been watching my videos for the past few weeks, then you know that I didn't open my first bank account until I was 18. And like most 18-year-olds, I really just followed in the footsteps of my parents, which meant opening up a bank at one of the major banks in my area. Now, imagine my surprise when I actually went to talk to the bank and asked them how much money I could be earning on their savings accounts, and they told me I could get 0.01%. Not 1%, not 0.1%, but 0.01%. Needless to say, I was pretty underwhelmed by all of this, and just out of not knowing any better or not feeling like I really had a choice, I ended up sticking with that account and their atrocious savings account interest rates for several years. That is, until I heard of high yield savings accounts. Which brings us to today's video. For those of you who are just trying to save money to create an emergency fund, or maybe you're saving up for a big purchase like a car or a house, and even in today's economic climate, you might just be saving money in general. Anytime you're saving money, you should be putting all of that into a high yield savings account. Now, this is something I wish I would have known about much earlier, and in fact, I didn't really learn about it until a couple of years ago. But all of the money that I save, now it goes directly into a high yield savings account. Obviously, if you don't know what a high yield savings account is, we're about to go over that, but before we do that, I think we should do a quick primer on what a bank is and what it actually does. See, when I was a kid, I just thought of the bank as a place to keep my money safe, and if I ever needed to withdraw some cash, I could use an ATM, or they would give me a debit card to handle all of my purchasing. But what I didn't know was what actually happens to that money when you give it to the bank. Say I open up an account for $100. That money is actually not going to stay in that account. Instead, what the bank is going to do is take that $100 that I deposited, make a note that that's how much my account is worth, and use the $100 to issue out a loan to another customer of the bank and charge, say, a 10% interest rate. Now, when the bank charges that interest rate on the loan that they're issuing out for $100 and it all gets paid back, the bank will end up making $10 in profit off of that from the interest that they generated on the loan. And if I ever need to use my $100 in cash, it's already covered because they got that paid back as part of the loan. Now, if you only have two customers at your bank, one depositing money into their account and the other one getting loans, this process is not going to work, because if sometime during the loan that's being paid back, I decide to take out my $100, the bank isn't going to have it for me. But if you distribute this process across millions of customers, you'll definitely have enough cash reserves and be making enough profit to run a bank. Now, this process makes sense. I mean, the banks have to do something in order to turn a profit, otherwise they would cease to exist. So what are they going to do to incentivize you to open an account with them? Well, they can offer you various benefits, and one of those benefits could include offering a little bit of interest earnings on your savings account. Now, most of the big major banks that you can think of, they're going to offer atrocious rates. I'm talking about like the example I said of 0.01% or maybe 0.03%. But there are other banks who specialize in what are called high yield savings accounts that will offer you significantly more percentage for your interest rate on your savings account. For example, a couple of years ago when I opened my first high yield savings account, they offered me 2 to 2.5%. Now that's like 250 times the amount of the original bank that was only offering 0.01% on their regular savings accounts. So let's do a quick comparison. If I took that $100 and put it into a savings account that only had a 0.01% return, then that means after a year I could expect to earn 1 penny. However, if I took that same $100 and put it into a high yield savings account that was earning 2.5%, after a year I would have earned $2.50, which is incredible compared to the 0.01% interest rate. On top of that, we're only talking about $100 here. Imagine if I had saved $1,000 or $10,000. The whole process just incentivizes you to save more, because the more you save, the more you're going to earn in interest on that account. So an obvious reason to put your money into a high yield savings account is in the name. You're going to earn way more money on your savings account in interest. On top of the rates that you might be getting for just opening a regular high yield savings account, you can actually earn a little bit extra by doing what's called a certificate of deposit, which is also known as a CD. This is basically an agreement between you and the bank that any money you deposit into this account, you're guaranteeing that you will not take any of that money out for an agreed upon length of time. And because you're doing that, they're going to give you a slightly better interest rate on your account. Now, the length of time can fluctuate anywhere between a few months up to 10 years, and the rate that you get is only slightly better, somewhere between 0.1 and maybe 0.5% an increase. But if you know that you're depositing money that you may not touch for a while and it's okay to essentially lock it up and gain a little bit of extra interest, this is actually a pretty good way to squeeze as much value as you can out of some of these high yield savings accounts. Another great reason to open a high yield savings account is it helps you protect against inflation. Now, our money does this process called inflation every year where the amount of purchasing power that it has, or the value of the money itself, lessens. Now, when this happens at a controlled rate and we're monitoring everything, it's actually a good thing for the economy. But you can have what's called runaway inflation, where basically your money becomes so worthless that you could have $1,000, but it might only be worth buying a loaf of bread. The good thing is right now inflation is around 2% per year, and that's give or take. Some years it's a little bit more and some years it's a little bit less. But if you open a high yield savings account, you can actually protect yourself against some of that inflation. If your money is just sitting in a normal savings account or a checking account that's not earning any extra interest, your money is losing that 2% value every year. But if you're putting that money into a high yield savings account and getting somewhere like a 2.5% or 2% interest rate, you're either canceling out the effect of inflation or you're earning above it. Even years like right now in 2020 where the interest rates are much lower than they were in the past, they're still hovering around 1%, which means you're cutting the inflation rate down in half just by putting your money into this high yield savings account. Now, as long as you're choosing banks and opening up accounts that are FDIC insured, this means your money is going to be protected, which makes this essentially a no risk investment. Lastly, it's just really fun to have a high yield savings account and look at it each month to see how much it's earning interest. And it really feels like your dollars are going to work for you. Now, it's not a huge return by any means, especially if you don't have a lot of money in there, but you can really think of it as your very first passive income. Now, there are a couple things you should know about most high yield savings accounts. First is that these banks that are offering these accounts most likely won't have any physical locations. And frankly, this is how they operate, and that's why they're even able to offer you such high interest rates on these accounts compared to the traditional banks. They don't have to pay for employees, and they don't have to do any of the fees or costs that come with maintaining and opening up a bunch of offices in every single state. On top of that, it's most likely that the account that you opened is not going to have a checking account associated with it. And this is because a lot of these banks really specialize in only savings accounts. Now, there are some exceptions. There are some banks out there that offer both a high yield savings account and a checking account. And there are even some banks that offer interest rates on your checking account. But for the most part, you can expect that you're probably not going to have a checking account associated with the high yield savings account. So you can probably expect to be moving money from one bank to another bank in two separate accounts. Another key point to consider is that a lot of these interest rates actually fluctuate with how the economy is doing. Given our current economic situation with the pandemic and everything going on, the rates have definitely lowered quite a bit. In the beginning, when I first opened my high yield savings account, I was earning around 2 to 2.5%, and right now the rates are fluctuating from 1 to 1.3%. Obviously, if the banks are earning less money because the interest rates are lower for loans, that means our money in the high yield savings accounts are going to be affected because the bank's money is being affected. So let's take a quick look at what's being offered right now so you can get an idea. As of the publishing of this article on Investopedia.com, which was on August 7th, 2020, the best competitive rates being offered are between 1 and 1.3%. With a percentage of 1.3 and say a deposit of $10,000, after a year, assuming that that rate stays the same, you can earn $130. And this is actually still pretty good. I mean, you can think of this as paying for a month's worth of groceries depending on where you live and how big your family is, or if it's just you. You can think of it as an extra $130 that you're saving just for putting your money into a bank account, and it's certainly adding a little bit more value to your money by slowing down the inflation rate. Now, when you're looking at these banks and the accounts that they offer, you want to check on two very specific things. Number one, make sure that you're opening an account that is FDIC insured. This just means that if something happens to the bank and it goes under, your money is protected, it's guaranteed by the FDIC, and you're going to get your money back. For example, on the Affirm website, you can see on their savings page, they let you know that they're FDIC insured. And most of the banks out there are going to be FDIC insured. I'm just really pointing this out so that way you make sure you're not stumbled across some bank who's going to promise you 10% on your high yield savings account, and it's really just a scam. Number 2 is to look at any fees that might be associated with opening this account. It could be maybe an initial minimum deposit that has to be met, or maybe you need to maintain a certain balance in the account for a certain period of time to get all of the complete earnings. So make sure you're looking at these things. Maybe opening up an account that has only a flat 1% rate is better than opening up an account with a higher interest rate, because maybe the other account requires a minimum balance or has higher fees associated with it. You really just have to kind of look at it and see what works best for you. Now, I wanted to end by answering this question, and I'm seeing it pop up in a few different places, which is, in 2020, is it still worth it to open up a high yield savings account given the current economic situation that's going on and looking at how much the interest rates have dropped on these accounts over the past 6 to 7 months? In my opinion, the answer is still yes. Anytime you're contributing money to a savings account for an emergency fund, or maybe you're saving up for a big purchase that's coming up soon, it's still the best option to put your money into a high yield savings account as opposed to what the traditional banks are offering. Even at 1%, you're still earning a significantly larger amount of money on interest compared to the traditional banks. So really, all of the same benefits that we just talked about still apply, and unless those interest rates drop all the way down to what the traditional banks are offering, they're still really the only and best option when it comes to having a savings account. So if you're interested in just getting started with opening up a high yield savings account, definitely go out there, take a look at all the rates, see what's being offered. Make sure you look at any fees that might be associated with opening some of these accounts, and definitely make sure it's FDIC insured. With that being said, good luck, save your money wisely. If you want to see more content like this, like the video and comment down below. If you want to stay up to date, make sure you subscribe, and I'll catch you all next time.